JD Handmade Essential purchased two assets so far. Two laptop on 5th October and they booked it in IT equipment and tools. Let's go there. Bills. We bought it from Computer City. As this is paid, this will not be under for review or unpaid. It will be under paid. So this is our computer bill. Let's open the bill. This is booked in IT equipment and tools. We see what we have purchased. Two MacBook Air. We have the serial numbers. One will be used by Janet Baker and another one will be used by David Hudson. As per IFRS 16 property, plant and equipment, there is no depreciation charge in the month on which an asset was purchased. Therefore, no depreciation charge for these two laptops in October 2024. However, we will look into the ways in which we can automate the depreciation charge process in QuickBooks. We can do this in two ways. One through our recurring journal process that we have already saw in our prepaid amortization. This is the one. We can replicate it and alter the GLs to use it as a fixed asset depreciation recurring journal entry. But as we have already familiar with this one, let's try fixed asset module. We can go there by advanced accounting, then fixed assets. We can also add multiple assets together. Let's add one by one. So first thing is our asset name. So what is the name of our asset? It is a MacBook Air and asset code will be, since this is a laptop, let's assume it's LP and this is our first laptop, so 001. This is our asset code. In description, let's add serial number of the asset. We can find that from our invoice. Let's select the first one, copy, paste it here and add the user. The first laptop will be used by Janet Baker. If we click that, what happens? Purchase price, we can put it in. Purchase date, we can put in, but depreciation start date is now no longer editable. Method is locked. So basically, if this asset is not depreciable, we can just simply add it as an asset and it will stay here as long as this is in our ownership. So let's toggle that off. So purchase price, what is our purchase price? $1,000 per laptop. Purchase date is 5th of October. Depreciation start date, no depreciation in October, so it will start from 1st of November. Depreciation method will be straight line. Useful life 3 years. Salvage amount is 0. Asset account. Now let me tell you the mechanism of depreciation. Depreciation of an asset means we will distribute the cost of an asset over its useful life in number of months, and the resulting amount will be used to reduce asset from balance sheet and charge expense in profit and loss. The cost value of an asset is their purchase price and that goes to asset account. For our case, it is IT equipment and tools GL and our purchase price is $1,000. So we have our asset account here, that will be IT equipment and tools. The value of this GL will never change. Then how will we reduce our asset from balance sheet? This is where accumulated depreciation, another fixed asset GL, comes into play. Journal of a depreciation charge is depreciation expense debit and an asset offsetting negative entry will be accumulated in accumulated depreciation GL. In balance sheet, we will see asset account positive with cost value and accumulated depreciation account with a negative entry. And the sum of these two amounts will be our total fixed asset in balance sheet. So let's choose our accumulated depreciation account from here and our depreciation expense account. Our mapping is now ready. You can save this. Since two of our asset is same value and starting depreciation at same date, we can duplicate this. Remove copy of, this will be laptop 02. This will be used by David Hudson. Rest of the mapping is same. If we save this, now we can see year-wise depreciation amount and their journey. Here on November 30th, asset value will be 1000. Depreciation will be posted 27.78 USD and remaining value of this asset will be 972.22 and the list goes on. It will end on October 31st. The balance will be 0. This is our fixed asset module. Journals will be pouring in from November 30th.